Okay, what's up guys? Welcome to another video. In this video, I'm going to do a quick breakdown of a trade that we took yesterday on EUR/USD, just to give you a feel of what my strategy looks like and how we set ourselves up for success. So if we look at the daily time frame, price has been moving bearish quite a bit. We came here, break of structure, and as we can see, price does have patterns. So once we take out any liquidity, we took out those highs, price reversed. Then we came and targeted these lows here. Once we took out that liquidity, price again reversed, came into a premium level right there, just above equilibrium, and then pushed onto the downside in terms of internal structure, came and targeted these external lows down here. Once we took those out, then potentially we could be in this pullback phase, coming into again equilibrium or premium prices before we now start swinging to target these external lows. So for us, at this point in time, the past month, that leg was very bearish coming into the beginning of this month. And then the last couple of weeks, as we ended the month, EUR/USD was just ranging or range bound around these areas between the 1.4 level and 1.5 level. Between the 1.4 level and the 1.5 level. That is where we've been, not really moving anywhere. We don't know whether buyers or sellers are in control at this point in time. However, that is our leg phase. So we'd want to potentially see prices come up here before we now continue selling to the downside. With that said, we had a nice change of character here. We did have news coming out last week with the Fed chair speech, which came out negative for the dollar, hence that big rally on EUR/USD and other USD pairs. Weakening of the dollar pushed EUR/USD to the upside. We had a nice clean internal break of structure, which now tells us that buyers have stepped into the market and potentially would want to push price higher towards the upside. With that said, looking at the range, this is now our new dealing range that we are working with. This becoming our equilibrium levels right here around 1.44, 1.46. In a sense, that is a nice clean break of structure with a confident body close above. So then two things, like we've said, patterns do repeat themselves. So once we've taken out liquidity, we'd love to see that pullback happen. So this is our leg. Our leg has pushed us to the upside. We'd now want to see that pullback leg. That pullback leg potentially setting up and pushing price towards our equilibrium again before we get that big reaction towards the upside. Now we can see that this particular candle in itself kind of drove price back to the downside, and then we continued and then pushed back up. Buyers stepped in aggressively and pushed price aggressively back up. So I'd still consider that part of the leg and not part of the pullback, because I'd want to see corrective structure coming back here for me to actually know that we have mitigated some of these demand zones and taken on some liquidity, and price now wants to continue to the upside. So this is currently where we're at. Coming into the new week, I've done a weekly analysis video on the channel, so you can check that out just to see my projections of what price action would look like in the week. But again, remember, this is the range that we are dealing with. So now let's zoom into our 4-hour time frame. And we can see that this is that break of structure that is very clean, that we have been looking at, indicating to us that buyers have stepped into the market and want to push price a little higher. This is my fib level. Again, that is a nice key POI that I have here. Let me see that I have here. This particular reaction is that particular candle that I want to consider as part of that leg, part of that push, this push to the upside. So I will not consider this a pullback in the leg. I will just consider it one big push towards the upside. A pullback leg, for me, for it to be valid, would give me some nice internal breaks of structure with demand zones failing and support zones actually holding for me to consider that pullback actually active. So now I've marked out my POIs. I'd love to see prices come maybe to that equilibrium and react off of there. If it gives me a deeper pullback, I'd love to see it come into demand. That would be my demand zone area where I'd now get in and want to be involved to get those buys aggressively targeting these highs for a nice big risk to reward push in a sense. Now, since we're here on Monday, it's a new trading week, and this is current price action as we're looking at it. I'd love to see confirmations that this pullback has already started, and the confirmations to me would come down at a slightly lower time frame. So I'd move on to my 1 hour to see what price is doing for me right there. I'd love to see those lows taken out or another internal low taken out there for me to confirm that this pullback has now begun, and for me to look for now confirmations on how I can get involved in this trade. So then once price has pushed there, at this point in time, we just wait. Asia session is here. We're waiting for London session to kick in, for some volatility to get into the markets, for that, for it to give us this confirmation. Once London opened, we got a nice confirmation, push to the downside. Again, this is a bit aggressive, but when price has given me such a setup, this right here is an area I'd want to be involved. I don't think anyone should be missing such a trade. That's where I'd want to really get involved aggressively with that risk entry, targeting these lows down here. If we get taken out here, again, I do have a buffer in terms of entries. So I know that I can, my strategy allows me to take up to 3 or 4 losses in a row. So if I get taken out on one entry there, taken out on the second entry there, then I'd want to see price come all the way to this premium supply up there, and then I'd look for those entries. For now, we do nothing. We just have a slight change of character here by a weak change of character, which is okay. It's an initial sign that we might want to push price lower. But again, I'm waiting for final confirmation on my entry, my lower time frame entry position for me to actually want to be involved. So then if I zoom in a little bit lower on price action, we can see that we have a nice swing internal right there with a clean break of structure to the downside. If you observe keenly, you can see that price did come up and mitigate here, mitigate our zone that we're looking at. Let me just delete this. Mitigate the zone. However, no confirmations for me to enter, because my confirmations rely on liquidity to be taken for me to actually go down. Now we can see that this is just one price leg to the downside with no liquidity taken at any point in time, and then this is just an internal pushback, an internal retracement or push up towards there. So then I'd want to see price come down, then maybe take out those highs for me to actually want to be involved. But for now, this is just one leg for me, and that's my consideration. So I'm not executing any trades at the moment, just sitting on my hands, not letting the emotions of the FOMO take hold of me or get the best of me, just because I understand that in trading we're getting paid to just wait for our setups to actually set themselves up. Then we manage our risks and execute accordingly. So this would be an area where I would be tempted to actually take an entry. Once you see this bearish candle sprinting, maybe FOMO would kick in and tell you to want to be involved. However, for me, not yet. I'd rather have this trade leave me than me try to chase it and take entries here that are actually not valid. This is an area where I'm comfortable taking a loss. I'm not comfortable taking any losses around this area. So then I still wait. So I'll have my alert set. I have my alert set for there. If price gets back up there, then I can look for any interesting trades to take. My invalidation is that if price comes all the way down here and reacts off of this zone and then comes back up, that might be an invalidation for me. But again, that would just mean that I'd wait for further confirmation and not take a risk entry, as I'm about to demonstrate in this trade that we took yesterday. So then price pushes down. We seem to be kind of consolidating over here. We have a nice push to the upside. Buyers have stepped in as we get into the crossover of London and New York. More volatility is getting into the market. This would be a nice FOMO candle that can induce early sellers to want to get involved. Nice engulfing candle that has taken out that. Someone could see maybe on the lower time frame that this is just a liquidation of some of those highs, and that might be the push. If you're on the 1 minute, that would be a nice trade for you to be involved in. As for us, our entry model has not yet presented itself, so we wait. This might also be a FOMO push to the downside. Again, if you're in the lower time frame, you definitely got a nice risk to reward pushing to the downside. So we wait for our strategy. Again, we still have our alerts set up there. We are waiting for price. Once price has come up here, again, that's a nice consolidation and a push to the upside. That's liquidity taken on the lows. If you're looking for those buys, you could potentially get those buys. This, in a sense, as a change of character, could be another FOMO-inducing price action or shift in price action. I, in my beginner stages, would potentially want to start buying because I feel like this is now a sign that we are moving to the upside. Again, it's all perspective and it's all interpretation. Again, in trading, no one is wrong and no one is right. If I was to play the buys, however, I'd wait for price to potentially come back to these areas for me to want to play those buys, targeting those highs and maybe targeting those highs. For now, for this setup, I'm looking for sells and a sell confirmation, and my alert has been triggered once price crossed that zone right there. So then I'd look for my short tool. I'd be on my MT5 waiting to execute. Once this price pushed on to the upside, that was my entry candle. 4.7 is the pips with a 1 pip buffer to 5.7. And again, remember, I'm not going in with my full account risk. This is not a full margin strategy. So I'd be hoping if this gets taken out, then that would be my second entry. If I get taken out of that second entry, I'd sit on my hands and wait for price to come here, take out some of those highs before I now look for that continuation swing to the downside. That's kind of how I've set up my strategy. It takes a lot of data collection and backtesting, but once you have a grasp of it, then there you go. So risk to reward 3.2, wait for the next candle to tag us in. Next candle has tagged us in. Now we wait for a nice reaction. We'll get a nice reaction to the downside. Moving up there. Again, this would be a sign of maybe move your stops to break even. However, for this strategy, no stops to break even. It's a sink or swim, just because I've tested it out several times and I've seen that over time my expected value is higher if I let my trades either hit full stop loss or full TP, just because of my risk to reward and positive expectancy. This is that area we were saying if we were on the lower time frame, we'd potentially want to get those buys to the upside and see whether we can continue with this bullish momentum. However, we do understand that we are against that larger swing trend, but this could also be a sign that we are starting. So I'd wait for further confirmations before actually getting into any trades. For now, we're in the sells. I do not open any trades simultaneously. So whatever trade I'm in, I'm married to that bias until I'm invalidated. So again, there we are. Nice push to the upside. We get a nice reaction, like we said, nice reaction from that demand zone. Buyers want to push price higher. No reason to panic as we wait, because this is just trading according to our trading plan. This would also be another panic candle. However, let's just wait and see what price actually does. We get a nice liquidation of the highs. Price comes back, tests our level, which is why it's good to have a sort of buffer over there so that the spreads don't take us out. The good thing about this time frame is that spreads are not too crazy compared to lower time frame entries. So then that would still be a valid trade. And we just sat on our hands and waited for price to play out. We get a nice push to the downside, nice confirmation. TP1 is hit, which is a 1 to 2. 1 to 2, then maybe we can move our stops to break even or take out some partials. Let's see if we get 1:3. Again, no reason to panic. We get our full TP hit on that trade, and that is such a beautiful trade. It could have gone all the way down. Again, this is a high probability entry for me. So on my lower time frames, I'll be targeting a 1:5, 1:6 with a very tight stop loss and a sniper entry somewhere around there. If you'd want to know how we get such entries, please do check out the trading community. We do have a nice community right there that we go through some of the setups that we get and how to actually execute trades like these. So coming into the new day, that was the end of Monday. We're coming to Tuesday, and Tuesday was just a ranging day. We haven't seen much. Asia just ranges into London, and there's nothing much going on here. So sit on our hands, wait for New York open to potentially give us some volatility and see whether we can actually continue with that downside momentum, because this is our higher time frame objective here to potentially move us towards these areas. That would be the weekly objective in a sense. If we don't get that, maybe price comes back up here and then we get a nice reaction. These would be our week highs that we'll be targeting in the end. Again, guys, that is the trade breakdown for this week. For today, get more insight on how we approach the markets. You can get my free ebook. It's linked down below. We also do have a webinar that is free that we host every week in collaboration with STL, which is Sylvia's Trading Lounge. We do have quite a plethora of guests from across the continent, guys who've been profitable for quite some time with tried and tested strategies and insights. So do check those out. We also once in a while get some international guests, people who've been on the floors of Wall Street, market wizards, and just guys who've been in the game for decades and decades with a lot of experience that they are willing to share with us and our community for free. So you can check those out every Tuesday. We also have a WhatsApp community that you can be involved in just to stay updated with what's going on.